Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. Today we will be talking about cycles with a return appearance by David Gerwitz, who's the managing director at Charles Nenner Research. David, nice to have you back.
It's a pleasure to be back.
I wanted to have you back because I'm going to try to nail you on something. Last time you were here, and I know you're a big cycles guy, and we had a discussion about gold, and I think back a few months ago, gold was maybe in the low 1400s, and you did say we were going to have a retest of the lows, but you said it would not make a new low, probably in the 1360, 1370 range and head back up. But we went all the way down. We actually pierced below 1200. So the question is, what happened? And does this, somehow change the forecast for you in terms of your cycle work?
The answer is no. There's two pieces to it. There's the cycles that give direction and the target that gives actual numbers. So we did take everyone out of 1900. It's a pretty good call. We had a target down at 1285, and it actually went down there and went past there. Sometimes it goes past. Even in stocks, Charles originally had a target of 16, low 16s. It got there, and then it showed up with a higher target of 1720. So sometimes the target gets pierced, usually on the tops and the bottoms. But nonetheless, the cycle's still saying the bottom is now, and as a matter of fact, what we sent out yesterday was that people should be very cautious until they go long in the low 1400s, because it's going to be a bit of a boxing match till then, and then it'll be a better buy signal.
Now, I understand, the premise of cycles. I mean, they're clearly evident in things like agricultural commodities with plantings and that sort of thing. They're evident in the economy with the sell in May and go away. People have to pay taxes in April. They're left with less money to invest, etc. But a lot of it seems, sort of like a crutch to me. It's kind of like, let's come up with a way, that's not based on any real fundamental reality, but it's just kind of like this very, eclectic kind of analysis that, hey, it's gonna hit a bottom or a top every so many periods. And then there's always this kind of back adjusting, like it didn't happen, but then you're saying kind of it did happen. So,
well, no, very good questions. There were two questions you were saying. One is a piece of the assumption that things go in cycles as we see them. Therefore, if that were true and they always followed, everyone would be able to predict exactly based on what you just said. We don't agree with that. We think, for example, the fact that it's a hot summer, how come certain commodities went down? You'd say, well, if it's hot summer, by definition, A implies B. Bernanke said yesterday, I'm going to adjust based on the economy. We don't look at that. We look at cycles, which tell us the economy, and then afterwards we come and say what the Fed's going to do. And that's why he's been able to predict bond prices and the other things as well. So that's number one. Number two, our assumption is, and this is something Charles Nenner came up with, and he's quite a brilliant man to do it, I think, and is that it's not just the logic of A implies B like you just said. We believe, and we don't know why it works, that if you take top to tops of any data series going back hundreds, if not thousands of years, that is more fundamental than what people call fundamental. And for example, if we called the top in Apple, we called the top in gold and silver, and everyone else didn't, who's right? You know what I'm saying? So my argument against you is that...
Well, you called one top, and that was a good call. But there's, people have, there's been books written, fooled by randomness, right? This could all be sort of random patterns that kind of look like... repeatable things that repeat. Anyway, let's move on to so now. What's your outlook for the economy, the macro economy? We're getting data now which shows, second quarter growth was quite weak. How does the second half of the year look? And then we'll take that and sort of reflect on some of these commodities.
Okay, one of the things Charles uses we know the VIX is one thing that talks about volatility. He looks at something called the Baltic Dry Index, right, which you're familiar with.
Rates.
Right. And those are not looking good. Those look like they top, so it doesn't look like good for the economy. He also uses copper, which we know. And copper, he called the top 9-10 months ago and said it would be bouncing here, but long term's down. So he doesn't have a good economic picture going forward. And as you know, he predicts there's going to be a major downturn in stock prices over the next several years.
But wouldn't those things be more lagging indicators? Because, like, if the economy is slowing down, then it follows that freight rates come down or the price of copper goes. If the economy picks up, if demand picks up, then eventually freight rates go back up, copper prices go back up. So I don't know how much of a leading indicator that is.
Well, that's why we look at the cycles within them to tell us. In effect, the cycles let us see around the corner, so the past repetition allows us to see what's going to be forward rather than using the term leading and lagging. For example, let's talk about gold, because obviously gold is...
You're still bullish?
No, absolutely.
Short-term and long-term?
Short-term, it's a fight.
Right.
But 1,100 seems to be the value at which that's the replacement cost at the mines, right? So that seems to be a level that is not going to go past. In nat gas, he called it from $6 to $1.70. It bounced off there. It's longer term. He believes gold's going to go back and retest its high, silver as well. So the people that stayed in the last year and a half of pain after 7 or 8 good years, everybody's different. Some came in later, some came in earlier, but we think they should hold and consider actually adding to it, which is a hard thing emotionally to do after a year and a half of negativity.
Yeah, but isn't it kind of like saying people who bought gold in 1980 at 800, eventually it was going to go back to that price, which it did, but in real terms, it never really got back to that. It's still below, way below that price.
Which is why we believe emotionally better to stand aside at a cycle top, wait till it bottoms, and then go back in. And we do this across all the different categories, and I welcome all the readers to go to charlesnenner.com, write in, say that we saw speaking, and get a free month or so of the research to see what we cover in all the different areas, stocks, bonds, commodities, and currencies.
That's a great offer. And I'm with you on the sort of contrarian, buy low, sell high. You'd think most people would understand that, but they tend to do the opposite. And what I'm curious about also is oil. Now, oil has been quietly creeping up. We're back over $100 a barrel. And what does your work tell you about oil prices?
Well, first let me say, I'm going to go back in the past and let me say now, he called crude from 33 to 147, and on a station that I don't have to mention, he said we're going to have deflation at the time, and people should go to the site and see it. And they laughed at him and went back to the 30s, up to the hundreds, back a little up. Now, he had a target, he said it a year ago, 116. And he doesn't, that's something that's been on. We're now long 2 crude stocks, actually. So, so that seems to go in line with that, because he looks at the underlying commodity as well as the stocks relating to that. We cover all that stuff.
Right.
So that's a target that he's had. But, it's been in this upward move, but
we're
still
not that
sideways.
far from 116.
That's right.
You could almost say that
it's not
call
that far.
happened, right?
Yeah, I said it a while ago.
But that's it, 116?
Well, no. He believes you get to a spot and then you reevaluate, because he also sees war cycles bottoming now, going back again thousands of years of data, which also means we don't have any control over that. So if wars come and that triggers other things, you could see a much higher spike, and that's why I recommend everyone write to the site and get the research and follow what he has to say.
So bottom line, how, as an investor, what are the things we should be looking at right now, based on your research?
Fine. Let's go through everything real fast in a minute. Bonds are actually bouncing now, and he's been long more or less the last 3 decades, and he plans to be the opposite the next 3 decades, placed on a 60-year bond cycle, where rates were high 30 years ago. I discussed it last time, and 60 years ago there was a new technology invented called television, which had the U.S. government selling savings bonds at 2.5%. 60 years ago. Now they're doing opposite, but the rates are still so low, so that's going to go back the next 30 years. Rates are going to go up. Nothing anybody can do about that. So bonds are planning to, nothing anybody can do about it.
I would take the opposite side of that bet. But go ahead.
So that's the plan, is longer term to be short bonds, however people do it, either to TBT, shorting TLT, however they do. We don't manage or broker. We just sell research. People have to do it. Stocks are near a top, and they are Charles thinks they're going to be down for many years. Not straight down. There's going to be years way down, years up. It's going to drive everyone crazy.
I could see that with austerity and budget cuts.
Okay, and we just see it based on cycle. Yeah. Then gold and silver, I plan to be long. Apple, he called the top in at 702, and when it got to the mid-5s, he said it would be a bounce only, and then came back to where it is under the 4s, and it should be bottoming soon. The currencies, he called the Aussie and the Canadian to par. We're getting ready for a good Aussie move soon. The dollar next year. Aussie up. Aussie up, which goes
that would be a bullish commodity call.
Yeah, it used to be always as a commodity currency they go hand in hand, but we believe we take each one separately. And then the dollar next year, he's planning to hit a major top and be down for years. Really? So that's kind of the picture. Wow. And there's other things I recommend people write to the site and get more details.
All right, great. We'll definitely be following it. Thanks
you,
very
Mike.
much. Thanks for coming on. That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.